this podcast, we're actually going to be looking at the accounting assumptions that you need to know for the up and coming exam. So the accounting assumptions, we'll be looking at the describe and explain objectives. So we're going to go through today how to actually answer and the structure that you'll need to demonstrate in order to get the top marks for that question. Last week's podcast concentrated on completing a general ledger and posting the account balances to the actual trial balance. So that concludes the practical part of the exam, and now we're going to move on to the theory part of the exam. Just a bit of a recap. So the accounting cycle, the first thing that you need to do is obviously to create the general journals, and this will come from the source documents and also the transactions. From there, you'll create your REA LOE to determine what accounts that you'll be actually creating in the general ledger. Then you need to post the journals to each individual ledger account, and from there, complete a trial balance. And here is the accounting joke of the day. Why don't skunks have to pay taxes? Because they only have 1 cent. Now, there are 3 accounting assumptions that you're going to have to know for the exam, and the first one that we're going to be concentrating on is the accounting period. Now, I've actually highlighted the key words that you'll be used in your definition for this accounting assumption, and the accounting period basically states that the accounting period and the life of the business can be divided into equal time periods. So what that basically means is if you've got transactions for the month of July, that means that you'll actually account for those transactions in that month, not in August or not in the preceding June month either. So in other words, when you actually incur a transaction, whether that's a revenue or an expense, you'll actually account for that within that period of time. And as such, organizations therefore have to prepare their financial statements according to this accounting assumption as well. The second accounting assumption that you're going to have to know is what is called the going concern. Now, an entity is normally viewed as a going concern. So in other words, it will continue in business for the foreseeable future, and management has neither the intention nor the need to materially scale down operations or liquidate the entity. So in other words, a going concern is an organization that may be in some financial trouble, whether that's due to some economic event, for example, COVID, or because they may be scaling down their operations, for example, selling a number of assets in order to try and generate cash flow. So they're the 2 things that you usually look at in determining whether a company is a going concern or not. Whether they have to liquidate the entity, so in other words, try to generate cash by either selling of major assets, or they're in some financial trouble. So within this concept, it assumes that when preparing a normal set of accounts, in this case for us a trial balance, the business will continue to operate for at least the next 12 months. So you need to look at and assess whether the organization is in enough financial trouble within a 12-month period, and if so, they have to show to their prospective investors or to the general public that they are deemed as a going concern and therefore may close down in some foreseeable future. The last accounting assumption that you need to know is called the legal entity. That can also be called the economic entity assumption, but in this case and for this unit we are going to call it the legal entity assumption. The legal entity assumption basically states that businesses must keep their transactions separate from their owners. In other words, the business transactions are the businesses only, and the owner's transactions are the owner's transactions only. So for example, if the owner went out and bought a private motor vehicle, they cannot account for that motor vehicle in the business transactions and business accounts because it is used for private use. On the flip side of that, the owner cannot actually deem to purchase an asset if it is an asset bought by the business itself. So therefore, the entity's assets and liabilities must be kept separate from the owner's assets and liabilities itself. All right, second accounting joke for the day. What is an accountant's favorite AC/DC song? And that is Back in Black. So what we're going to be looking at now is the structure for the describe objective. So you're going to get one of these questions on the exam dealing with either the going concern, the accounting legal entity, or the accounting period assumptions. Now, in order to answer this question and get 100% of the marks, the first thing that you need to do is to define the accounting assumption in question. And from there, you need to explain how the accounting assumption applies to the stimulus question. So we're going to be looking at a practice question now, and I'll give you a set out on how to actually answer that question. So let's practice. And this is one question here. A retailer commenced businesses on the 1st of January and buys inventory of 20 washing machines, each costing $100. During the year, he actually sells the 70 machines at $150. How should the remaining machines be valued at the 31st of December in the following circumstances using the going concern accounting assumption? So what we need to do here in this question, as per the structure from the previous slide, is firstly to define the accounting assumption in question. In this case, it is going concern, and then to look at what we need to do in these businesses' financial statements. Do we need to actually say that it's going concern within the next 12 months, or that the business is going to continue undertaking the normal operations that they have been in the past? And so the first thing you need to do in this structure is to provide a recommendation using the accounting assumption. So I always start the sentence in any of these questions, whether it be the going concern, the legal entity, or the accounting time period, is to use this sentence. Based on the above scenario, the retailer will have to disclose that the business would be a going concern. So in other words, because the business is actually selling 17 out of the 20 washing machines, that would be considered a significant scale down of assets. Part 2 of your answer is to describe or define the accounting assumption, in this case the going concern. So a definition of the going concern is that a business must disclose that they are a going concern if within a 12-month period they wish to shut down operations, if the business incurs a major scale down of assets, or are going to liquidate, the business is required to release their intentions with this matter. So I've highlighted the key words that you need to include within your answer. The time period being the 12-month, an example of a going concern, a major scale down of assets, and also the key word here being liquidate as well. So in other words, if any of these cases occur within a 12-month period, they must release a statement to the financial investors that they are going to be a going concern, and as such may be at risk of shutting down altogether. Part 3 is to apply the accounting assumption. So in this case, due to the sale of the 17 out of 20 washing machines, it would be considered a major scale down of assets. So I've actually applied the going concern characteristics here, and in this case, as I said previously, 17 out of the 20 sale of washing machines would be considered a scale down of assets due to the business intentions of either liquidating or stopping operations. The business now owns just 15% of their previous asset portfolio. This move results in a sizable loss of cash flow and revenue. So within your answer, the next thing that you need to tell me is why it would actually be a going concern. And some of those examples would be a considerable loss of cash flow and revenue from the sale of assets. There may be a considerable amount of debts that they have actually incurred during their time of operations as well. So you need to actually tell me the outcome of being a going concern. So this concludes our vodcast on accounting assumptions. Next vodcast will actually be looking at the analysis part of your exam, and this will be in form of extended response. Calculator.